Welcome to our deep dive. Really excited for this one.
Yeah, should be fun.
Into financial theory with Python.
Great book.
It is. And, this is a book written by Dr. Yves Hilpisch,
Of course.
founder of the Python Quants.
Yeah.
And, in finance, staying ahead of the curve is key.
Absolutely.
And this book is like your secret weapon to mastering finance in Python.
It's fascinating about this book.
What is it?
It really blends together financial theory, the math behind it, and Python.
And it's not just about the numbers, right?
Well,
It's about how they all work together.
Exactly. Understanding the why.
And it's really exciting because this year, it's the 20th anniversary of the Python Quants.
Big year.
It is a big year for them.
The firm behind that renowned certificate in Python for Finance program.
So you're in good hands
Absolutely.
with this book.
Now imagine you're just starting out in Python for finance.
Right.
This book lays the groundwork beautifully. Starts with a simplified two-state economy. Think of it as a mini financial world.
Okay.
Where you can grasp those fundamental concepts.
Got it.
Cash flow, present value, and net present value.
So it's like building blocks.
Exactly, before you build that skyscraper.
I like that.
And what's brilliant is that Dr. Hilpisch brings in Python right away.
Oh, wow.
So you see how the code mirrors the theory, letting you experiment.
Cool.
For example, you'll learn how Python's data types, like integers, floats, can represent cash flows and interest rates.
Interesting.
And you can even use tuples and lists to model portfolios with multiple assets.
So it's like learning a new language.
Exactly.
You start with the basics.
You got it.
Vocabulary, grammar.
And
then you can write the more complicated sentences.
Now let's delve a bit deeper.
Okay.
We encounter uncertainty in financial markets.
Yeah.
It's about understanding and managing risk.
Because, the market, it's not always predictable.
Right. And here the book introduces you to probability measures, expected returns, and volatility. All through Python, of course.
Nice.
You'll see how to actually quantify that risk using probability.
Okay.
And calculate things like potential return and volatility of your investments.
So you're going from that gut feeling to something that's more data-driven.
Exactly.
I like that.
Now, the book dives into contingent claims.
Right.
Like options, a European call option, for example.
Okay.
The payoff depends on the future price of an underlying asset.
Interesting.
It uses Python to show how to model and analyze these instruments.
So it's not just theoretical.
No.
It's giving you the tools to use them.
Exactly, in the real world.
Now, this is where it gets really interesting.
It does. The book introduces this concept of replication, which is essentially creating a synthetic version of a complex financial instrument.
Interesting.
Imagine replicating a European call options payoff using just stocks and bonds.
So it's like breaking down a complex recipe. I like that. Into its core ingredients.
That's a great analogy.
And then, what does this lead us to?
Well, this leads us to arbitrage.
Okay.
The ability to profit from price discrepancies.
Oh, wow.
Without taking any risk.
Now, that's the dream.
The book connects these theoretical ideas to real-world trading strategies.
See, that's what I love.
Yeah.
It bridges that gap.
It does.
Between theory and practice.
To enhance your understanding, it expands from that two-state model to a three-state economy.
A three-state economy.
Yeah. Think of it as a framework for understanding market completeness and pricing challenges.
Got it.
Imagine a scenario where it's impossible to perfectly replicate a financial outcome.
Okay.
The book introduces super replication to deal with this.
So a way to minimize those losses.
Exactly. When perfect replication isn't possible.
When it's just not feasible.
Yeah.
So we're starting to see how even with these simple models, like the two-state economy, it unlocks this deep understanding of finance.
Absolutely. A strong foundation.
And it builds from there.
It does. Introducing the capital asset pricing model, or CAPM.
Okay, now we're talking about the big leagues of finance.
We are, and it makes these complex ideas approachable.
So it's all about empowering the investor.
Absolutely.
To be more informed, to be more confident.
Exactly.
And, we've just scratched the surface here.
We have. There's so much more to explore.
I'm excited to keep going.
Me too.
Yeah.
Before we go any further,
yeah,
it's worth pointing out that this book, Financial Theory with Python, it caters to beginners and pros alike.
That's important.
It is.
Because It's one thing to learn the theory,
Right.
but to actually apply it.
Exactly.
That's where this book excels.
It does.
It bridges that gap.
Absolutely. And as we go forward,
Yeah.
you'll see how it integrates those practical aspects into that theoretical framework.
Okay.
Now, shifting gears a bit.
Right.
Let's talk about individual investors.
All right.
The book introduces utility functions.
Utility functions.
A way to model how people make decisions.
Interesting.
Based on their preferences.
Got it.
And desire to maximize satisfaction.
So it's about figuring out what makes investors tick.
Precisely. And once we understand their motivations, we can use Python to solve those optimization problems.
Optimization problems? Now, how easy is that for someone new to Python?
You know, the book does a great job of breaking these concepts down, step by step.
Good.
With clear explanations and examples.
So it's accessible.
It is.
Even for someone just starting out.
Exactly.
Okay.
So financial theory with Python, it really makes financial modeling accessible.
To everyone.
To a wide audience.
I like that.
Building on optimal portfolio choice.
Okay.
The book introduces equilibrium pricing.
Okay, so what is that?
Where supply and demand and investor preferences intersect. To determine the price of assets.
So like a balancing act.
You got it.
Between those individual choices and the overall market behavior.
Exactly. And the book shows how Python can model and analyze these complex interactions.
So we can really see how these markets function.
And how prices are determined.
Very cool.
But the exploration doesn't stop there.
Oh.
The book dives into a static economy.
A static economy.
With a vast number of potential states.
Okay, now this sounds complicated.
Well, it allows for modeling even more complex instruments and scenarios.
So we're moving past those simplified models.
Yes, we're stepping into a more realistic market representation.
Okay, got it.
And to navigate this landscape, the book equips you with Monte Carlo simulation.
Monte Carlo simulation.
Leveraging Python's power to analyze and price derivatives.
Like those European options we talked about.
Exactly. It's like running virtual experiments.
Interesting.
To see how different scenarios might play out.
So you can assess the risk and reward?
Precisely.
This dynamic economy concept. Sounds like a whole new level.
It is, but the book breaks it down into manageable steps.
All right.
Uses clear language, examples,
and of course,
and Python code.
You'll learn to visualize and analyze price evolution over multiple time steps.
Gaining insight into the dynamics
of the market.
So it's not just about the theory.
It's not just equations.
It's about seeing those concepts come to life.
Through practical applications.
I love that.
And to further illustrate, the book introduces binomial trees.
Binomial trees. Imagine mapping out the potential paths of an asset's price.
Over time.
Over time, considering factors that could influence its movement.
Wow, that's powerful.
It is. The power of binomial trees.
So these tools really enhance your understanding.
They do.
Of market dynamics. Help you make smarter decisions.
Absolutely. And the book shows you how to use Python to price both European and American options.
Oh, wow.
In these dynamic environments.
So it all comes together.
It does, like a grand finale where all the pieces fall into place.
I like that analogy.
Financial theory with Python guides you through this journey, starting with fundamentals, building up to those sophisticated modeling techniques.
So you can become a proficient financial modeler?
Or an artificial quant.
An artificial quant. I love it.
It's inspiring to see how this book empowers individuals.
It really is.
To take control of their financial understanding.
And decision-making.
Exactly, highlighting the transformative role of Python and AI.
In finance.
In the world of finance.
Wow, we've covered so much ground.
We have, from those basic two-state economies to dynamic markets and options pricing.
It's been a journey.
It has.
And it really shows, you know, the breadth and depth of this book.
It really does. It goes deep into the core of finance.
And you walk away with the tools.
You do.
To understand how markets work.
Exactly.
And what's impressive is how the book uses Python every step of the way.
It's not just about reading. It's about seeing it in action.
It makes it tangible.
It does.
You know, you can apply it.
Financial theory with Python.
Yeah.
It makes you an active participant.
In the financial world?
Not just watching from the sidelines.
You're in the game.
You're in the game, understanding the mechanics.
Analyzing the data.
Building models.
Making decisions.
Informed decisions.
It's about taking control.
Of your financial destiny.
Whether it's your own investments. Or in a professional setting.
It's your guide.
It is a guide.
To navigating the world of finance.
In the 21st century.
Like having an expert by your side.
Walking you through it.
It really is.
It shows the power. Of combining that financial knowledge with technology.
Absolutely.
This book embodies the artificial quant,
It does.
bridging the gap between finance and AI.
And data-driven decisions.
So for our listeners who want to learn more, we have links in the show notes to the Python Quants website.
All those resources.
Check them out.
And one last thought.
Okay.
Think about how these concepts apply to you.
To your own financial life.
Optimizing your portfolio, assessing risk.
Understanding those market dynamics.
This book gives you the tool.
To make those informed decisions.
It does.
It's about taking that knowledge and putting it to work.
And that's where the magic happens.
It is. Keep exploring, keep learning.
Keep pushing those boundaries.
Until next time on The Artificial Quant.
Happy modeling.